In a dramatic turn of events, the Indian Rupee has reached unprecedented lows against the UAE Dirham, sparking widespread concern and debate. This plunge was fueled by fears that recent U.S. tariffs could severely impact India's growth and disrupt portfolio flows. But here's where it gets controversial. Some experts argue that this could actually work in India's favor, at least in terms of competitiveness. The U.S. slapped an additional 25% tariff on Indian imports this week, doubling the total duty to 50%. As a result, the Indian Rupee tumbled to a record-breaking low of 88.3075 against the U.S. dollar, equating to roughly 24.06 against the UAE Dirham. This marks the biggest single-day loss in nearly 3 months and likely prompted the Reserve Bank of India to intervene. Stay informed with the latest news. Follow us on our WhatsApp channels for updates. In August alone, the rupee depreciated by 0.68%, primarily due to Friday's sharp decline, marking the 4th consecutive month of losses. Economists predict that if these tariffs remain in place for a year, India's GDP growth could take a hit of 60 to 80 basis points, adding further strain to an already sluggish economy. India's central bank projects a 6.5% growth for the fiscal year ending March 31st. However, with U.S. tariffs potentially widening the trade deficit and weakening financial flows, the outlook appears grim. The tariffs come at a critical juncture when foreign portfolio flows have been lackluster, exacerbating India's balance of payments woes. Foreign portfolio investors have withdrawn $9.7 billion from Indian debt and equities this year, with over $1 billion pulled from equities immediately following the tariff announcement. Consequently, Indian equities experienced their sharpest decline since March. Despite the challenges, there's a silver lining. The rupee's depreciation this week, including a new all-time low against the Chinese yuan, might partly offset the impact of higher U.S. tariffs. The trade-weighted real effective exchange rate is now at its lowest in 2 years, which could enhance India's competitiveness on the global stage, according to J.P. Morgan analysts. However, this scenario raises questions about the long-term effects on India's economy. Will the competitiveness boost be enough to counterbalance the negative impacts of the U.S. tariffs? And what will be the ultimate outcome for India's GDP and trade relations? Share your thoughts in the comments below.